I'd like to, before we proceed, introduce Gaurav. Gaurav, if you can just wave so everyone can see who you are and where you are on the screen. Gaurav Nair is our partner in Aurik Capital. And the genesis and the history behind this is, from an Aurik point of view, we've always been stymied by the banks. We would work with everyone. Everyone is a client of a bank in this country. Every business is a client of a bank. We would work with banks. We would work with our clients. Our clients would grow. We would see potential. We could see the trajectories. We could see that positioning was being found, that systems were being built, that businesses were on the right track. And yet we always struggle to get funding support from the banks to keep the accelerated growth momentum that we typically see in the later part of the first year and the middle part of the second year with all our clients. And eventually we got fed up with this and said the time has now come to actually raise our own fund. Gaurav is he's one of the co-founders of a business called Geltech. And Geltech have become experts in a piece of tax legislation referred to as Section 12J. Section 12J was introduced a couple of years ago, and what it does is it allows people like you and I to invest independently into funds on the back of a tax break with the view to have that investment from us as private individuals support the growth of specifically classified as SMEs. And for us, that's any business really doing between 12 and 200 odd million rands of revenue a year. So Gaurav, I'm going to be drawing on you around some of the constraints and restrictions of the fund, not through your choice, not through my choice, but through the legislative procedures of how the Tax Act works. And with that, I'm going to now proceed. Can everyone see my screen, or do I have to reshare based on the small failure I had? Let me just confirm. Yes, you can all see the screen.
No, please reshare.
So I reshare. Okay.
Reshare.
Is that better now?
Yes, thanks.
Okay. All right. All right, wonderful. So let's begin. Yep, this is the economy we're sailing in, and we can't ignore the context. It's quite rough out there. The economy is very uncertain. It's extremely unpredictable. Sadly, we've got COVID, which has affected everybody, and hence that image. Every single business is operating and performing and sailing in a very, very similar sea. We've seen it with clients here in South Africa, with clients in the US, with clients in the UK. There's an enormous amount of uncertainty. We also have very unfamiliar government policy at play, in that we don't quite know what our economic policy is in the country. And all of that combined with COVID creates an enormous amount of uncertainty. And what's wonderful about the uncertainty is that it makes people nervous. And what's wonderful about being nervous is that you're prepared to look at different offerings. You're prepared to change the way you do things. And that provides, as far as we are seeing, the single biggest opportunity for the mid-tier SME sector, whether it be here, whether it be in the US, whether it be in the UK, whether it be in the EU, to find new market opportunities, reach customers that they were never able to reach before, and secure and lock them down. Because the fact of the matter is that tomorrow, the economy will be more predictable. We've seen enormous amounts of money starting to get flushed into the economy. Interest rates have dropped. And that, over a period of time, typically 6 to 8 to 10 months, starts to create, based on an economic clock, an uptick in the economy. Historically, over the last 158 years of data that has been researched, those businesses that invest now have the biggest opportunity 6 months from now in finding themselves in an economy that's starting to lift, in an environment where they have 20% fewer competitors, and if they have done what they ought to have done right, have offerings and business models that are very, very responsive to that uptick in the economy. So we are bullish. Even amongst that storm, we are bullish. The strategy for all of us in business has had to be reset, rebuild, reignite. What led to your success pre the lockdown, in terms of your business model, the way you made your offerings, the way you engaged your customers, the way you engaged your staff, the way you engaged your suppliers, can't be the same way that you engage them in this environment. Why? To repeat myself, because things have changed. And when things change, people need a different approach and different value propositions and different offerings. Most of us on this screen here have already started to digitize actively our businesses, to the delight, certainly, of Charles Anderson, who I see on the screen. Morning, Charles. And to the delight, I saw, where's Charles Parrington? Let me expand my screen. There's some very familiar faces here, which is so nice to see. And I'm sure to a recent newcomer, I saw Richard Majewski as well on the screen, very definitely. We've moved into a world of increased digitization, and that provides enormous opportunities for us. So resetting means making your business relevant in a very changed environment. Once you have relevance, the next thing is obviously to build the systems to institute the reset that you have created. And once you have built the systems, the next opportunity is to reignite. The funding here that we are going to be talking about to support that reignition. Its purpose is entirely growth orientated. So every fund has got a mandate, it's got constraints. You have to fund certain things and not other things. This specifically is a growth fund, not a growth potential fund, but a growth momentum fund. And that means if you have been through the reset successfully, you're in the process of rebuilding, and you can see an uptick beginning and starting and growing in your revenues and the penetration you have into the market. In order to capitalize on that advantage and to stay ahead, this is what the funding behind Aurik Capital is designed for. The timing is it's available now and will be over the next 6 months. And the type of funding it's equity funding. In an uncertain environment, you've got to be cautious about what type of funding you get on board. If you get debt funding on board, debt funding by definition means immediately, if I give you R1 million worth of debt today, from tomorrow onward, you have to start servicing the debt. Debt funding is good funding to have in a very stable, predictable space. In an unstable, predictable space, but where you are experiencing growth, equity funding becomes a better option. And equity funding is where the funder, in effect, acquires shares in the business, and the acquisition is used to support, or is used to provide the funding to support the ongoing growth in the business itself. So, we spoke about why we started Aurik Capital. We have intimate relationships with you all. Our relationships are intimate not only based on chemistry and people engagements through our various facilitators and yourselves, but our relationships are intimate also based on data. We, through the data that you provide, gives us a very good insight into the momentum in the business, the opportunities in the business, and hence we wanted to be able to directly introduce you to funding where we thought funding would be useful to maintain the growth momentum. The Section 12J legislation is legislation that was introduced, Gaurav, when? About probably 7 years ago now, effectively 6 years ago.
In fact, it was introduced in 2009, but back then it wasn't user-friendly. And only in about 2016, so very recently, did Parliament change it and make it more user-friendly, and that's when it really took off. So before 2016, it wasn't really used.
And it's got some criteria, some restrictions and some constraints. Can you take us through them very briefly?
Sure thing. So, I mean, as you mentioned about the equity funding, Section 12J was made specifically for equity funding. These Aurik Capital is not allowed by law to actually do debt. It has to do equity. But further than that, there are certain restrictions on what the actual businesses that Aurik Capital invests into can or cannot do. And these are what's not allowed are called impermissible trades. And so the underlying businesses, they can't do some of the following things. So one is they can't invest in immovable property, except for hospitality. So Treasury didn't want to stimulate, they didn't actually want to stimulate the property sector because they felt there was enough capital directed there. Secondly, they can't do any financial services. However, companies that engage in rental, that is allowed. But being a credit provider or being an insurance broker or that kind of thing, not allowed. Thirdly, one can't engage in any kind of professional services. So we're looking at financial advisory services, legal services, tax advisory services, stockbroking services, management consulting, auditing, and accounting. Again, these are not very capital-heavy businesses in general, and so they seem to have enough capital. Then there are the sin industries. So you can't invest in gambling, you can't invest in liquor, tobacco, arms, or ammunition. And then finally,
interrupt you, Aurik, can you invest in illegal cigarette trade because it's the boom market right now in South Africa? Or not allowed?
No, not allowed. Not allowed.
Damn.
Yeah.
Okay.
And then the other thing is that you can't invest in a business whose business is solely or mainly, that's more than 50%, carried on outside of South Africa. And this again speaks to the intention of government to really, they're giving a tax incentive to investors. They want to stimulate the local economy. There's also a couple of hygiene factors that are required by law. So when a 12J fund makes an investment, so when Aurik Capital invests, it has to invest in a company that's a South African company whose tax affairs are in order, who have a tax clearance. It has to be an unlisted company, or it has to be a junior mining company. So if Aurik was to invest in something in the mining sector, then it could be listed. And it also needs to have that it can't earn its income from investments only. So specifically, it can't just be a holding company that's earning dividends or a company that's just invested in listed shares, for example. And so the investment income in a year can't be more than 20%. In essence, it has to be an operational company that's actually doing things. And then finally, a requirement that Treasury put in to make sure the money is directed at small and medium-sized enterprises, they require that after Aurik Capital makes the investment, immediately after that, the assets of the business, not the net assets, the total assets of the business can't exceed 50 million rand. So that's only immediately after the investment. So it's measured the second after investment. Thereafter, the business can grow, and that's the intention, for it to grow and get very big, become a billion rand business. But this ensures that the money is directed at SMEs.
So guys, you can see from that, there are certain restrictions to what we can fund and what we can't fund. Based on my knowledge, based on my what I'm seeing on the screen over here, we are all in the clear. We are good to go based on most of the issues that Gaurav raised. Unless some of you pivoted and moved into the illegal cigarette or alcohol trade, which would be understandable given the natural propensity of an entrepreneur to behave like an entrepreneur does. But mostly all of us are safe over here. Just to clarify the mining issue, it does not mean that we can't invest in any business that doesn't supply into the mining environment. It was specifically located around mines, and nobody on this screen is building a mine. So Brendan, we are good to go on the mines. Richard, we're good to go on the mines. Guys, anything that you supply and service into the mines, we're good to go with the funding. What is the funding for? It's there to support a growth plan. A growth plan. The growth plan needs to be in action as opposed to theoretical. It needs to be activated and driven. And because of the data that we collect on the dashboards that we customize for each of you, we can see what the growth momentum is. And where we see an opportunity to maintain that growth momentum, and we see that the growth momentum could be compromised because of pressure on working capital, this is where we need to activate the opportunity with the fund. If you've done the work to reset and rebuild, and you're in the process of reigniting your business, what will be crucial, ladies and gentlemen, is to stay ahead. Because when that economy finally settles, you will be in a position where you make up the lost revenues over the last 6 months, if you've been able to stay ahead. See this funding almost as fuel to keep the engine spinning at the rate and pace that it does spin. The investment criteria, who can we invest in? It's exclusively and only for Aurik clients. We built it as an internal fund, focused on you, servicing you, maintaining the growth momentum in your business. We can fund from the 5th, 6th month onward. So some of you are recent entrants into the Aurik environment. We've got a couple of months to go, and I'll tell you the real reason why. In this kind of environment, what matters most is not your product and not your business, but you. And the reason for it is, in uncertainty, things change in businesses, and it's really, really hard to predict what those changes will be. A lot of us were caught with our pants and skirts down when COVID hit. Honestly, we did not expect it to be what it would be, to the extent that it has been what it has been. And the big difference from a funder's perspective is to recognize the theory that, hey, here is a business with a product, there is a forecast, all of that matters. The technology is good, the product is good, the service is good. Yeah, sure. What's more important is who's driving it. Because what we're going to be looking for specifically is investing into businesses that are driven by people who've got the right mindset to cope with future changes that will absolutely happen in the next 6 to 12 months. So it is an inevitability. And really, the way that you've approached the past, the way you're approaching your business now, is of more interest to a funder, I promise you, than the actual product or service that you have. The product or service that you have will be valuable, but the way you've behaved in the last 6 months is going to be even more valuable, because that you can rely on. You can rely on investing in the character of a business owner who has the ability to cope with uncertainty. We're looking for growth momentum, and again, to reiterate it, this is not a funding opportunity that says, there's a new market I'm approaching, it has got massive potential, here's my forecast. As opposed to, we found a new market, we're in the new market, we've got traction in the new market is responding. To maintain our growth rates, we need investment. We can invest up to 6 million Rand. Up to 6 million Rand in any one business. It's a significant amount of money, that. And it has to be a business doing upwards of 12 million Rand annually a year. And then finally, when we invest, an equity investment brings the funder on board as a partner in the share equity of the business. We are looking to maintain a minority position. In any investment scenario where we have to invest beyond 50%, we are unable to proceed and do so. So we can invest up to 6 million Rand as a minority shareholder in any business doing 12 million Rand or more annually that can demonstrate it's enjoying growth momentum and wants to accelerate it. Gaurav has spoken about who we can't invest in. That doesn't include any of us over here. We are not a distressed business fund. In other words, it's not a rescue fund for businesses in severe trouble. The mandate that was given to us by the investors said it needs to be focused consistently on growth momentum. And there are T's and C's. As Gaurav mentioned, because Section 12J is a provision in the Tax Act and was made available by SARS, they said, we'll make it available to South African businesses. We'll make it available that private people can invest in private businesses, but those businesses need tax compliance certificates. So we all need to be up to date with our tax compliance. The fund, as I've mentioned, would be between 1 and 6 million rand that we can invest for a minority share in the business. And the application, again, is on growth momentum, not growth potential. So let's just talk about some of the areas over here. For those of you who have made good inroads into this market, you might be looking at some competitors and saying, hang on a minute, they have plant, they have equipment, they have stock that I could buy for 50 cents in the rand or 30 cents in the rand. And that stock has value. That stock was acquired when the rand dollar was sitting at 16, it's now sitting at 17.40. There's an immediate gain for me over there. I can discount it into the market. And in discounting it into the market, I can get access to new clients. For example, that piece of plant and equipment bought new would come in at 16 million rand. I can pick it up for 4 million rand. And it's not to say that you're preying on your competitors who are in distress, but that's just the natural outcome of a market that's been shook so hard. Another area would be, we've got new penetration into a new market. We've made changes in our business model. We want to now acquire technology in order to enable and accelerate the performance of our business model. And for that, we need to raise funding. We want to invest in marketing. We've made adjustments to our products. We've made adjustments to our services. The world needs to know now. And we know exactly who it is that we serve. So we want to capitalize on the opportunity to reach new customers, reach new clients. We need marketing investment. Hey, one of my competitors is really struggling. I've been approached by 4 or 5 of their staff. I need those technical skills on board, and I can see how those technical skills will contribute to the current growth momentum we're enjoying. And what's unusual about this fund is that we will invest in the things that banks would never invest in, such as people, technology, and specifically marketing. To qualify something that Gaurav said, about 50% of your trade has to be in South Africa. If you found opportunities in export, we're able to fund exports too, because exports need funding. When you enter into markets at a distance, it's more expensive in the beginning until it moderates itself, but the investment's worthwhile making. The duration of the funding is the nature of Section 12J says we have to remain invested in the business for a minimum period of 60 months, 5 years, after which the fund has to liquidate itself within the context of the business. In other words, any equity funder, if you think about what the business of an equity funder is, an equity funder takes bets on businesses. And they take bets by saying, we're going to put some money into Brendan, your business, bless you. We're going to put some money into your business. We're going to be there for 5 years. We believe that what you have will grow in the next 5 years. And then we want to exit. That is the product that an equity funder has. And where they put $1 in the business, they hope to exit with $1.50 or $2 or $5, whatever the case might be. So we fund with the view to exit. We don't fund with the view to remain. And that's an important feature of an equity-based investment. The return, investment and return dynamics. So from a risk and performance basis, the way that Aurik Capital is looking at the world is we're investing in clients that we know. We know because we've worked with you and we continue to work with you. We're investing in growth and we can see where it's coming from. This means your dashboards, please, need to be up to date and accurate. It's a trust relationship between us. Those dashboards, when you populate them, the flags that you see on your dashboards forecast growth and forecast growth momentum for us. It lets us know that we're making good investment decisions as partners into your business. And finally, performance will be managed through monthly integration. Once we complete our work with you, for the duration of time that the fund remains invested, we would embark on a monthly integration session, month on month on month, keeping the dashboard live, because the dashboard reports on the fund, and that reporting meets the requirements of the financial service provider, of FSP, which is the government authority that's issued the license for the fund to be established. Gareth has massive reporting obligations, and those obligations go through on a quarterly basis. And at any point in time, because we are investing the public's money into businesses, the financial service authorities have the opportunity to step into the fund, do an audit on process, do an audit on the reports, and make sure that we are behaving as we said we would, based on the basis of how the license was issued. Exits. So here we are, 60 months down the line, 61 months down the line, 68 months down the line. We as a funder need to exit. And there are a number of ways that this can happen. It can be that we do an entire sale of the business. If you, for example, turn around and Charles, you said to me, hey, listen, I found a buyer. A buyer is a mid-cap listed entity. It's looking to acquire innovation. It's looking to get access to all our clients, which are embedded in our business through the technology we've provided. We want to sell. We would actively support that process and actively support you getting the right valuation for the overall business, because as partners, what you gain, we stand to gain alongside as a minority shareholder. You might be selling to private individuals. Some of you might consider listing your businesses. The listing environment is sure to change in the next 4 to 5 years. The moment it's quite expensive to list, but there's competition coming into that space. We've seen some digital stock exchanges already appear, and there might be opportunities to exit via a listing. When you list, you in effect are selling your business to the general public and the investment community, but you're turning your equity into cash and into tradable shares. It's an interesting option. Or if we're not going to be selling the business, if you opt not to sell the business, we would require you to buy back shares. Because remember, the purpose of an investor with equity, my trading product is cash that's been given to me by the public. I want to apply that cash to productive use and growth. We're applying it into you as an individual and your business. As it has grown, I want to harvest that initial investment and hopefully with the profit, return it back to the investors that trusted that cash to us to invest in your growth. It's a farming mentality. That's the business model of a funder. So 60 months down the line, 65 months down the line, the business has grown. We've done good work together. The funder turns around and says, hey, Sue, I want to now exit. How do you see that exit happening? Are you opting to sell your business as a whole, or are you opting to buy back our shares? So the question then is raised, how do you buy back the shares? And what we do have that does work, because it's the only thing they can do, is very good relationships with the banking sector around raising debt funding. So I want you to envisage a scenario, and these are fictitious numbers. Let's say you have a business. I'm going to make round numbers so I don't sound like a president. It seems to me at the moment, presidents all over the world are struggling with numbers generally. We had it with Zuma. We've now got it with Trump. Johnson's fallen over his feet already a couple of times in trying to announce some of the numbers of investment in COVID relief. So let me keep very round numbers. Let's say the business is worth 10 million Rand. let's say you raise R1 million, and Gaurav is a actuary, so please keep me on track here, Gaurav. You raise R1 million from us for growth. We put R1 million into the business. Over a 5-year period, we grow the business to a point where the business is worth 50 million rand. We had 10% of that business. Am I right, Gaurav? Yeah. We want to now exit. So an exit of 10% on a 50 million rand business is 5 million rand. What we then do is we go to the banks, we raise the 5 million rand by way of debt. You buy the shares, you buy your shares back. The funder receives their investment. We paid back to all the funders that funded the Section 12J fund. And you're left with a 5 million rand loan obligation. A 5 million rand loan obligation on a business doing 50 million rands worth of generative revenues in an upward curve, you settle over a 3-year period. Over a 3-year period, the business continues to grow. And let's say over a 3-year period, the business is sitting at a value of 65, 70 million rand, and you're sitting with 100% of that share equity capital again. That's how you need to understand and see the purpose of equity funding in a process like this. It's an opportunity for you to ramp up and accelerate when the opportunity presents itself. There will be a cost to it, as there is a cost to growth in all instances. But the end game is for you to get from a 10 million rand business to the 65 million rand business 7-8 years down the line, owning 100% of it with a view to do a final exit. I hope that makes sense. There's a process. Of course, there's a process. We're a systems-driven environment, and we love systems. We shove them down your throat every day, consistently, non-stop. And they get shoved down my throat too, every day, consistently, non-stop. And thank heavens for it. There's an application process. After this event, what Pippa will do is communicate with everyone that was here. She will send you an email with all the details on this. There's an application process. The application process will take you no more than 5 minutes. And the purpose of the application process is simply to get a sense whether we could or could not fund you based on the information you provide. Because there's nothing more frustrating when someone says, hey, we've got funding available, you make an application, and Fatima, what? You know, if you're working with government, if you're working with the IDC, you can wait 18 months before they've decided whether they should or shouldn't fund you. That has no value at all. So in 5 minutes, we'll have a pretty good sense. We're going to keep the application open for a week because you just want to get to, yes, I'm in the game, or no, it's not suitable right now. We're going to close it on the 12th of August. And some of you will be familiar with this expression. We have a fund which is limited. I would love to be able to fund every business possible, but it is limited, it is capped. Who's not familiar, just with a show of hands, with the expression walala wasala? Oh dear. Tabo, can you unmute yourself and explain it, please?
It means if you sleep, you stay behind.
Yeah, if you snooze, you lose.
Yes.
Hence, the early bird catches the worm. Walala wasala. We're keeping this open for 1 week. 1 week. Go through the application process. Know that you can be funded should you wish to. And should you then wish to proceed from there, we then go through a process of compliance. And for that, we need updated financial statements. As Gaurav mentioned, by law, we have to have a tax clearance certificate. There are various company documents that will be communicated by Fatima. The dashboard needs to be up to date. And before we proceed with the entire process of applying for the funds, going through an investment process, we sit with you and we do the deal. We'll say to you, if you apply for the funding, these are the terms and conditions. And they need to be agreed up front, because there can be nothing more frustrating that if you get excited about raising the funding, we go down a process that might take 2, 3, 4 weeks, and then we can't agree on the terms and conditions of the funding. It's a waste of everybody's time, and it can create enormous frustration. So the term sheet talks to the principal processes or the principal elements of the funding. We are looking to raise more or less an amount of 2 million rand. We're going to do it on a valuation that's calculated as follows. It's going to be in there for a period of no less than 5 years. The operating procedures, the reporting procedures will be ABC. Literally, it's about 7 or 8 elements that on a snapshot you can look at and say, I can live with that, it works for me, I'm happy to proceed on that basis. Once that's in place, what we then do is a funding bootcamp. The funding bootcamp will be run by Fatima. It runs over a period of 3 hours, and what it does, it helps you put together your funding memorandum, your funding pitch. It helps you get a good sense of how to do your valuation, how the valuation works, how much funding you need, where it would be applied, what the impact of that funding would be in your business over a period of time. It gives you all of that, and it arranges that entire process with you, for you. So you build out your funding memorandum. From there, we have an investment committee. And guys, I promise you, you know, I look at Gaurav on the screen and he looks very severe, but he's an actuary. He doesn't have a life. I'm joking. He has a very good life. But he loves numbers, and he has wizardry with numbers. He can see through numbers. So we have 4 people that sit on our investment committee. We would ask you to make a pitch to the investment committee, arguing why you would be a good investment. I would be there very definitely in support of the process. And with that, we then make some adjustments to the funding proposal and the funding requirements and settle on whether we are good to go or not. Once we're good to go, it really is about subscription agreements and disbursements. The exciting thing that we are able to do, which is very unusual in an equity fund, is if you say, hey, I need 6 million rand, but I need it over a period of 1.5 years, and we can identify that we're going to make 2 million rand tranched investments, we have the ability to do that too. So there's a lot of flexibility behind this, and it makes for a very, very exciting opportunity. And with that, I'm going to close. Just write down that form site application so you know where to apply. I'm joking. As I said, Pippa will communicate with all of you. You don't have to write it down. Pippa will communicate with all of you and send it through to you. It will literally take you 5 minutes. 5 minutes just to get to the other side of a yes or no and reasoning why. And with that, I'm going to close. I have taken up, am I on time? 8:14. Yeah, I'm pretty much on time. Are there any big questions that anyone would like to put forward? The best way to do it is keep yourself on mute, raise your hand, I'll see you, call you out, unmute, and then we can address the question. Brendan, I can see you.
How are you?
Good. It looks like a parliamentary process. I should say honourable member.
Paul hasn't got his sachet yet.
I can see you.
Can you hear me, Pavlo?
Yes, we can.
Obviously, we're very early days in the Aurik process.
Sorry, guys. Just one thing. Please, can you all mute yourselves? Please, can you all mute yourselves? Brendan, you can proceed now, I think. Yeah, there shouldn't be an echo.
Okay. Just we're very early stages with the Aurik process. We definitely see some potential to be on board with funding. We obviously still organizing ourselves and gearing up for growth. We want to put our hands up, but we're not sure that you know, we don't want to be walala wasala when everything kicks in. Obviously, just because we're still in early phases. So what we obviously want to put our hands up to be considered. What happens at that in our scenario?
So what happens is this: Aurik Capital there's a tax season. All of you are familiar with your own tax seasons, am I right? You've got a mid-year tax season, you've got an end-of-the-year tax season. The tax season is where, in your personal capacity, you have to put forward your tax position to government. Unfortunately, this is not Dubai, and it's not, which are the other places, Gareth? There must be a few. We're not in the Netherlands, Antilles, we're not in the Caribbean. So we all have a tax season. And what happens with the tax season, from an Aurik Capital point of view, what we do with Geltec, Gaurav and his team, is we speak to a number of financial advisors. And we speak to financial advisors and say to them, hey, listen, what you see on the screen over here is the future potential of growth in this country. I think it's become accepted that the mid-tier SMEs is where the growth in South Africa will lie, very definitely. We've seen that corporates are struggling to grow the economy. And I say this through no fault of yours, mine, or anyone else's. But startups in this environment have taken a lot of pain, a lot of pain. So in effect, the mid-tier SME class has become one of the most interesting investment classes from a business perspective. And what we will be doing twice a year is we will be going back into the market and we will be topping up consistently the Aurik Fund. So Brendan, there are two big opportunities in your business without a doubt. The one is the digitization opportunity that we've spoken about, and the other is the on-site tire repair opportunity on the mines that we spoke about. And I do believe that both of those would require funding. So please certainly go onto that URL, which you've written down reliably. Take 5 minutes, put the position forward, and we'll be able to confirm on the other side how we would deal with the timeline behind this. Sue, you had a question. You had raised your hand. Honourable Member Sue.
There we go. Pavlo, it's partially answered with Brendan's question, because we've just come on board. So at this stage, it's blue skies. We have no considerations, actually, in terms of which we could apply for funding at this point. We would require trade finance in order to increase our stock to supply our markets, which we have to do to supply our clients on a monthly basis. Would this apply at all, or do we need to get to that 6-month point where we know how and what we would require funding for?
Okay, great question. So guys, it's a really good example. It's a really good example of how the funding can be applied and where it would be applied. So let's look at that scenario. For those of you that don't know, Sue's business makes they have incredible compound capability. And what I mean by compound, they have the ability to craft and create chemical compounds that are quite remarkable. So there's a lot of deep intellectual property around the formulation and the production and distribution of various compounds per se. In that instance, and Sue and Daniel have only recently joined Aurik. I think you've been with us for about a month and a half or so. We're in the early stages. In those instances, let's say they find a good market for one of their products. What would you invest in? Would you invest in the potential of a good market? Or would you invest in a good market showing itself to be a good market because that good market has started to buy the compounds from you? Or would you invest in a good market, buying those compounds, with one or two big clients in that market signing a 3-year supply agreement? That's how a funder typically looks at the business. So because we're working with you and we want you to get funding ready, through the process of the growth plan that we have customized around you, Sue, we would look to encourage and forge the relationships with the good market, players in the good market, on short to medium term contracts. But what that does is it secures and locks down the growth momentum in the business. So if, for example, an application was made and the investment committee turned around and said, hey, Sue, we're good to go, but what we would need are 2 clients to commit to short to medium term contracts. Immediately, that means it's a yes. You've got access to the funding upon that condition being met. That means from an Aurik point of view, from an Aurik business point of view, my team works with you in order to get that particular lever of opportunity delivered. Are there any other questions? Right, let me move on to the second part of the screen. Stefan, did you raise your hand? Stefan's only got
No, I'm good. No, I'm good, thank you.
Claudia's got his hands up, Pablo.
Oh, thank you. Where's Claudia? Okay, let me move on to this. There you are. Okay.
Good morning, everyone. I'm Pavlo and Gaurav. I'm Italo, actually. This is Claudia myself. Just with regards to export work, you said there may be some different limitations and different requirements for export funding. What are your restrictions around that?
Gaurav, do you want to tackle the first half of that question from a Section 12J, and then I can pick up after you?
Sure thing, sure thing. So in fact, this is actually something I wanted to clarify, is exports are totally allowed. Even if you had a business that was 100% exporting, that would be fine. The requirement of doing your business in South Africa doesn't touch on exports. Exporting is seen as doing your business here. It would be if you had a subsidiary or if you had an operation that was across the border, let's say. That would then come in. We have to make sure that that offshore operation is not more than 50% of your total revenue. But if you're exporting from here, that's seen as onshore, and that's fine.
You know, guys, think about it from this point of view. So, and I'll share a little bit of history here. So I'll tell you the truth about how this process with Section 12J came about. About 10 years ago, no, maybe 8 years ago, I was in the UK working with one of our clients there, a former South African. They're a printing business. They print business cards. It's horrible. Yo, that's a rough business. That's a very, very rough business. And this chap, Richard, had raised money, firstly from his grandmother, who had left him some money from Durban. So he took the money from Durban, he went into the UK and he established a printing, firstly he bought a printing business and then he bought some equipment. And he was struggling away, competing with everyone who prints business cards. And there are thousands and thousands of printers in the UK. Once we had gone through the positioning phase, the diagnostic phase and the positioning phase with him, what also happened in the UK around 2008 with the global credit crunch is that a whole lot of people were ventilated, in other words, made redundant or retrenched from corporate UK. And corporate UK is made up significantly of the banking sector. There were people with 10 years, 20 years, 30-year veterans who suddenly found themselves unemployed to the tune of around 1.5 million people. The global credit crunch really impacted the UK very, very severely. It then led to what's called the gig economy. And the gig economy is the freelance economy, because a whole lot of people couldn't find formal employment, and they became things like business coaches, they became graphic designers, website builders, you name it. But they would do small jobs, independent jobs as freelancers. And the gig economy burgeoned, it grew. It happened at the same time that Uber was coming to the table and becoming really a significant player. It happened at the same time that Airbnb was coming to the table, becoming a significant player. That whole gig economy grew. What Richard eventually realized is there was an opportunity to provide cards specifically for people in the gig economy. And he developed a technology that allows you on a lithoprinting basis to print one side of the card with the name, the address, the contact details in one single print instance. And on the underside, in other words, the back of the card, if you printed 1,000 cards, you could have 1,000 different pictures. So the front of the card was the same, the back of the card was unique. And what he had identified is that he found a niche in all those individuals who were clothing designers, who were flower arrangers, who were cupcake makers, so that when they went to events, their cards were a significant marketing tool. I could give Michelle my card with my name and my details on it, and I would ask Michelle, saying, hey, what's your favorite color? And Michelle would say blue. And I would turn to the back of my cards and I would find an outfit that I made as a clothing designer that had blue colors. And I'd say, here, your favorite color, here's the card. I would then see Amelia, and Amelia would say white. And I would find an outfit made out of white colors, and I'd hand that card to her. And this business needed $5 million of equity funding in order to develop this technology. When I went back to the UK the following time, Richard found it through the equivalent of a Section 12J fund, where private people like you and me had taken the view to, in order to manage our tax down, we would invest in funds that support SMEs. And that market in itself grew and it burgeoned. It's the same thinking behind this fund over here. If you think about where the future of our economy lies, we know that banks struggle to fund SMEs. We know that government seems incapable of doing anything right at the moment. The best people to fund people like us are people like us who understand that the potential that resides in a privately owned business is enormous because they themselves have come out of privately owned businesses, and in doing so, they get a tax break too. The government has made this possible because the government is saying, unless we get our economy moving and growing again, and we know that that economy moves and grows within the mid-tier SME sector, we know that the banks can't fund mid-tier SMEs. We know that we ourselves, although we won't admit it openly, struggle to fund mid-tier SMEs. This is a viable funding option. Therefore, we will support giving tax breaks, funders into mid-tier SMEs for so long as those SMEs grow the economy. And what does that mean? Government wants the businesses to grow. They want us to create jobs. They want us to digitize and become more effective at what we're doing. They want the value of that funding to result in the value of SMEs in South Africa growing in order through that to grow the economy. That is the principle behind the thinking of a fund like this and the principle behind Section 12J. So I hope that really puts the message across. And guys, listen, please hear me on this. I'm not deluded by, and I know, we talk about it a lot. I'm not deluded by this government. I think really they could do a far, far better job than they're doing, far better job. What matters over here is that we as business owners, we must focus on the things we have control over. We must put ourselves in positions where we have reset and rebuilt our businesses, where we are in control of it. When we do find opportunities to grow, be aggressive on capitalizing on that growth. Because if you grab that growth now, when the economy eventually starts to turn 6 to 8 months from now, you will by definition be a step ahead of everyone else. And that momentum will translate because it always has done so. The stats are there to support it, irrespective of the politics, irrespective of what the Rand dollar is doing, irrespective of the stupidity of so many of our ministers right now. So let's not be too concerned at all. Let's not be too concerned at all about the overall economy. Be more concerned about the economy you can create within your own environment. And we will back you on that basis, I promise you. With that, I don't see any more hands up, any more questions. Yes, one more. Hang on a sec.
Sorry, just one more. Maybe a silly question, maybe I've missed something here, but you're saying once we apply for the funding, we look at a 50% share investment,
No.
but well, up to 50% of the value of the business.
Depending on the amount of funding requested, yes.
Okay, so if you're saying it's a 10 million business, up to 5 million rand is
correct.
Okay. How do we get to that value of our business? How do we understand what is the value of our business? Is that a process that needs to happen through?
Yes. So in the funding bootcamp, we build out the value of the business. So you get shown how to value your own business. And guys, what we do is we have a formula that looks at valuation based on turnovers. We do understand that a lot of businesses have chosen to manage their financial affairs in a particular way. So the way that we do valuations coming into our relationship and the way we do valuations coming out of our relationship are going to be the same manner. It's going to be the same method. There's no tricky-dicky stuff in the valuation. And that's why in the funding bootcamp, you will do your valuation. You will understand the levers that impact your valuation. And in the pitch to the investment committee understands the valuation method too. It really is in part, firstly, to interrogate the growth opportunity or the growth momentum, but then secondly, to interrogate that valuation. You know, it's not about one party trying to outwit the other party. I think you've been able to pick that up, and I really hope you've been able to pick that up from this presentation today. It's funding in partnership for growth. The role of Aurik Capital is it is a product business. It's providing a product called growth equity. It wants value in its product. It's going to be sure that when it makes the investment, there is value in the product. And when it exits, it needs to extract value for its investment. And the success of that exit, in other words, the growth in the investment that Aurik Capital makes, is really important, because we use those stats and we demonstrate that we as a class of investing assets, in other words, mid-tier SMEs, are a worthy investment class. You've got listed entities, that's a class of investments. You've got bonds, you've got money market instruments. In many ways, what we're doing from an Aurik Capital is we're placing all of ourselves as mid-tier SMEs into a class of investment, an alternative asset investment class. And from an Aurik perspective, we're absolutely determined to demonstrate that what we have been saying for years and years, that we are the best people to invest in, shows and reflects in the performance of the investments that we make. If there are no more questions, guys, thank you very, very much for, let me just move on to the second screen. Thank you very, very much for making time to be here. Really appreciate it. I hope you got value from this. I hope you got some motivation from it. We're here to back you. We are here to back ourselves because we've opted to engage and work with you. We do most of our work with you based on growth. So I hope that this demonstrates and maintains the growth ethic behind everything we do. There are lots of opportunities out there. When you find them, bring them on board. Let's make them happen. So what's happening next? Pippa will send out an email to everybody with that URL that you have responsibly written down and got it exactly right. No need for it. It'll come to you on a email during the course of today. Pips, am I right? Fantastic. Lovely. Okay, everyone. Thank you very much. Take care. Tabo, walala wasala.
Inkos kakul pa Pavlo.
Thank you.